Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's February 24th, so this will be our chart lesson for the day. And you can see that we actually finally broke. Actually, yesterday we broke below that support, but we pulled back to test it. Notice that we closed right at it, so that could mean we're going to go lower. This looks like a big bounce rejection off these lows. We're way oversold down here. We actually made a new low. So we could rally from here. I think I talked about it yesterday, but most of this Ukraine stuff was probably already priced into the market. So the initial shock of it during the overnight sent prices racing lower. But once the regular market opened and people kind of gained their wits, we rallied the rest of the day. It took a little while, but we rallied on up and closed almost near the high. I mean, how big is this bar? This is another one of those huge bars. So it's a 186 point move from the low to the high. I mean, it's just incredible. This is very unprecedented type movement. It's very volatile. If you're not a pretty experienced trader, you need to be careful trading in this stuff. I mean, there were some people that were taken aback because they raised the margin today and weren't aware of that. If you subscribe to our premium section, I talked about it in the mid-morning report. So at least if you're part of that, you got a heads up. But usually your broker should notify you of that, and if they're not, then I don't know about your broker. But I mean, that's how I knew. My broker sent me an email says they were raising margins. Pretty simple, actually. But I'm surprised they didn't raise them sooner than this. But I guess with the possibility of World War III kicking off, they felt it was time to raise the margin. So no surprise there really. But anytime something really crazy is going on in the market, always be aware that they could raise your margin. So and there are trading halts too. If the market trades so far, they can halt it, and um, when it reopens, it could gap. So you got to be real careful about getting caught in something like that because it could wipe you out, not only your account plus more, depending on how big the market gapped. So those are very rare things these days, but it could happen right now, especially with what's going on in Eastern Europe. So just be aware of that. Don't be afraid to sit aside. I mean, yesterday was a great trading day. Today, even though there's all that movement, it was not a really good trading day. I don't have a whole lot of trades marked today because it just was it was real hard to know what prices were doing at times, and then when they did rally, they didn't give you any entry setups. It's just one of those days, and they happen. And so, don't be afraid to sit aside on a day like this, or if there's something crazy going on until this Ukraine stuff resolves, because it could get worse. I mean, we might have just seen the first. We might just be seeing the first chess move, and there could be many more to come, and there could be more players getting involved. I hope they don't drag the United States into this, into some kind of war or something, but who knows? I mean, if they start attacking going into other European nations that are NATO allies, then a lot of people could get dragged into this that don't want to. So anyway, I didn't mean to get off on that because I'm not a political kind of guy that tries to follow this stuff and give you my input on it. And although I try to keep up with the news and what's going on, I just usually don't get involved in that stuff, and I'm not trying to guess but these are just possibilities. So uh, take that advice how you will. Just be careful trading futures in this kind of volatility in this kind of market because it could come back to haunt you or bite you. So I mean, this is 100 whatever I said 186 points in this thing. So it's pretty crazy. And the volume look at the volume there, crazy volume. So um, we could bounce and go higher, but it wouldn't surprise me at all if we came back and tested this breakout of the support and went lower because I've got two targets down here. One is based on the darker brown, which would be my first target to the low side, and the other one's based on the full move from high to low here, and that's the orange one. So I could see us go all the way to 4,000. I mean, we almost got this target today in one day, and that was a long way down. So I mean, that was 150 plus points to meet that first target, and we almost got it today. And I think I talked about that yesterday. We could see it in one bar because we had a bar like that over here. I think this was a 200 plus point bar. So it could happen. So just be aware. Maybe this is a capitulation and we're going to go higher from here. I would love to see that. I mean, as a day trader, you've probably heard me say this, but we don't really care. As long as we get movement and setups, that's all we care about as day traders. But personally, I have long-term investments, retirement accounts, and things like that. A 401k from my previous life, you know, and most of America does have those things. So it's not good for the country for us to have a big sell-off, even though we really don't care as day traders which way it goes, as long as we get movement and entry opportunities. But long term, I'd much rather see it do this to the upside than the downside, because it's better for our country, it's better for the world, it's better for our retirement accounts, our economy, everything. So that's the reason I'd much rather see it go up than down. Although we can make just as much money as a day trader when it goes down like this as we can when it goes up. And when it goes both ways, sometimes you get some really good opportunities. Today didn't seem to really be one of those, but sometimes these days are great. Just like yesterday was probably as good a trading day as I've seen in a long time. But today was, I wouldn't say the same thing for today. But anyway, I'm going to flip over to the intraday chart. This shows you what we're looking at. If we come up short here and start really rallying strong, maybe this was a capitulation and we're going higher. I'm not ready to say that at all. There's just too many negatives floating around out there at this point, and with this war going on, anything could happen. So just be wise if you're going to trade. If you're new to this, if you're not really, just make sure you understand what futures are and how to trade futures and what can happen to you. There's so many safety guards today that can save us from things that used to happen, and the main reason the margin is so low for day traders is because the odds of you getting stuck in a trade and the market gapping are almost non-existent, unless we reach one of those triggers where the market can be halted, and then you could get caught in it, because you can't trade once they halt it. It doesn't matter what trade you're in, whether you're in the profit or you're in the negative, you can't do anything till the market reopens. And usually after it sits there and rests a while, whichever way it was going really strongly, it reverses and goes strongly the other way, and sometimes it may gap. So those safety measures could come back and bite you. So just be aware of that. And if you're not really, read up on that stuff so you understand it. Don't send me an email asking me to understand it, to explain it, because I can't explain it to 25 or 30 or 40 people. Just go read it. It's out there. Google whichever market you're trading. If you're trading the ES like most of us, go read the trading halt, the rules. There's percentages. I forget exactly what they are, but you probably should know them, have them written down, and know where those price levels are. Generally, your broker will send you that stuff. Mine does. So if your broker hasn't sent you that stuff, at least figure it out on your own so you don't get caught off guard. So on a day like this, it could happen to you. But anyway, let's go to the 2000 tick chart and go through the. Okay, here's the big picture. For the most part, we were in an uptrend all day. Just plain and simple. And what we had late in the day was a spike in channel. I didn't draw the rest of this on there, but it's there. And we even got an overshoot of that. I mean, this thing was just really strong late in the day. But again, there's not a lot of entry opportunities. So, I mean, you'll see there's a bunch. I put a bunch of greens in there, but eventually I just even quit putting them in there, because they're all a little risky, So, but it looked like we had this big spike down and we went sideways here. And for a little while there, I thought maybe we'd try to make another leg down, but we didn't. We bounced here. Looked like we were going to be in a range. We got outside. Looks like it was going to fail. We got outside again, looked like it was going to fail, and finally we found some support here off of the former resistance, and that's when you know it's probably going to go higher again, and then off it goes, boom. But that's how you want to trade this. Any trying to break out, assume it's going to fail even if temporary. And where you got to be careful is when it comes back, because it's almost always going to come back. This what was resistance here? Once you get a breakout, prices are almost always going to come back. Excuse me, I'm sorry. My little cough that I was almost gone and was almost gone away is back again. So this is still left over from when I had COVID, and I just can't shake this thing. I mean, it was pretty much gone, and then the weather got crazy again, and it's back. So I may have to pause here and cough occasionally. I can't help it, so I apologize. But and it just comes on me quick. So if I cough a little bit in your ear, I apologize ahead of time. But anyway, where I was going with this is the previous resistance, clearly resistance across here. And once prices break out, they're not going to go higher usually until they test it a few times and it holds. Notice that we tested it there and it went on up, then it failed and we got back inside. We got back out again. It tested it, it held, and we went higher. Came back. We couldn't even get back there, and then it's two legs back, and it doesn't hold this time, but they still take it higher. But it comes back finally and it tests it again, and it holds this time on several tests, and then it finally goes higher. And we do the same thing on this tighter range. It finally gets outside, and we really never got any good support here. We just made some higher highs, and then next thing you know, it's going higher again. So I guess the traders felt this was a good enough pullback and retest with it going higher to take it on. And we may come back and test this yet. So, and it may or may not hold. But that's generally the way prices work. They almost always come back. So even if prices are going to go higher on this breakout right here, we assume that it's going to fail temporarily. And that's why we don't trade with the breakout, but we look to fade it. In other words, when I say fade, we don't look to trade on long with the breakout. When it breaks out, we're looking for a short to come back. And that's what I mean by when I say we fade the trade. But let me zoom in a little bit and get through these trades. It's Thursday, so this will wrap up our week. We won't have another chart lesson until Monday. But anyway, early on we're trending down in this. We do get a little overshoot here, which leads to a break on the other side. This is long before 7 o'clock, and then finally you get a new low here, and you get a first entry, second entry. And then we already had a break and a new low, but a lot of times you'll get two legs down. Plus the overnight lows were down here, and we weren't there yet. So when you get that second entry right off the key entry point with that big bearish bar, you just about have to take it. If you don't, a lower high comes a few minutes later, take it. I don't know that I would enter this way down here, but when it breaks higher and then comes back down through here to the low side and goes out, you may go with it. And technically, I probably wouldn't have a problem going short right here, but I mean, that's just a really big bar. I mean, it's 29 ticks, so you're risking a lot. And you can see we traded down there every time, even though we bounced out of there, prices still traded down much lower every time. And so you really got a little room there, but you just have to be aware of that. And then a few minutes later, there's actually a little tick higher, but that still all looks like one move. And then we have what looks like a second entry long that fails with another big bearish bar, and we're still not to the lows yet. So you may take that one because it does look like a failure, but it's not ideal. So we bounce, you get a little reversal here, but it doesn't set up like a reversal. We just get two legs up and then an extra swing, and then we get a break, a new high, and then we get a first entry, second entry. And so you got a second entry short right there. It is above the EMA, but this has been a really strong trend, and this is right off the midline, and we've got one leg down there after a break and new high. So we'll probably get another leg. Since that was a second entry with such a strong signal bar, you just have to take it. We drop on down. You get a break here, a new low, and we kind of set a trend line there that we got to maybe watch for later. This one's tempting to go long, but I'd wait here and see if you get a higher or lower reversal, which doesn't come. Then you run straight up, and then it sells straight off. And this is where it's really hard. The only thing you can do is look at the big picture here. What is the big picture? We're still making higher highs and higher lows, but it's really choppy. We're swinging both sides of the EMA, so it's a weak sideways kind of an uptrend. So we got an upward bias here, and so that's the only thing you got to go by, really. So this runs up, you get a break, move to a new high, and then we're working down. Notice you get a first entry, and then you shoot below the EMA, pull back, you get a second entry, and this breaks higher above that bullish bar and then turns down. Normally I might have marked this red, but when you get this inside bar with no body really, and it makes a 2-bar matching low, you got to be a little more concerned. But in the volatility we've been having, you're probably going to at least get a scalp out of that. And I mean, that's not a very big move in comparison to what's going on here, but if you measure that, I mean, that's 7 points. So there's more than enough room to get out of that. So that's the beauty of this kind of volatility, is we're only trying to get 4 ticks. So if you can just get the direction right, you're probably halfway there. You got half the battle beat, because you almost can't miss on 4 ticks if you get the direction right. So anyway, it turns out to be a pretty nice move. We actually make a triple test here, and it's a nice signal bar, but it's just kind of choppy sideways, and there's congested looking, and it's below the EMA. It works, but I don't think I would take that trade. Pulls back. I just look at that as one leg up, so I don't treat that as a failure. Really, this was more like a failure when it came back here and turned up, but you don't get to break lower, so you can't really, you're trying to manufacture something if you try to really make that say, hey, that looks like a failure, because it does, and it worked just like a failure, but you don't really get the full effect if you don't get some breaks that trap people in. In this case, it went straight on up anyway, and then you get a pullback first entry, pullback second entry. Again, that's such a nice reversal bar that you could almost take. You want to take it as long as you got room to get out, because 4 ticks is hardly anything, but it's not a perfect setup again. So I marked it green. And of course, now we break out the high side fail, come back, we break out the low side fail, and then you test that once, and you come back and you test it twice. And so really you got a failed second entry short with a double test, and that support's holding, and that's a fairly decent bar with plenty of room to get out. So I like taking that one. Again, it's not perfect, so I marked it green, but we're steadily trending higher here. And now we're finally, you don't know for sure that this is the high of the range, because it's the first high we made, and it hadn't been confirmed or anything. But you can kind of look back at the midline. It seems to be fitting really well in there. And so you can assume that's probably it. And if you would have said, hey, I assume this one's it, notice how it's not fitting as good in there. Yeah, maybe down here it looks like, hey, it fits a little bit. You might could argue for it, but look how we missed both times here. So that leads me to believe that now maybe it's up here, and you pull it up there, and then it fits perfect, and all these other ones fit better. And so we drop back down, we bounce off the midline. You get it. Oh, we just talked about that. Then it breaks out and fails, drops down here. I don't see any shorts you can take here. You get a close outside new low, and it bounces. And we didn't even get back to the trend line the last few times. So it shows you the market is kind of strengthening. We're kind of gaining momentum here. But we just kind of go sideways. But notice how it's making higher lows each time. That's a good clue. And because of that, you might enter right here. If it would have just been one of these bars, I'd have probably marked this trade. But the fact you got that 2-bar matching high there, and you got 2 dojis in a row, or 2, they're not necessarily dojis, but no body bars, those show indecision. So when you get 2 in a row, and then notice even when it broke higher, it came back again, the market's just not sure. It ends up going higher, but it's just not worth risking. And so we run up and we're just kind of chopping along the same thing. And this one you don't, again, you get a little, you could argue there's a triple test and a fairly decent signal bar, but you don't have room to get out. So of course it takes on off and goes higher, and finds resistance right where we think our trend channel line is, but then we get the overshoot. So now you got to be careful that we may get a break here soon, which we do, but it doesn't happen on this bounce. It happens on the next one. So the market's still strong. Of course, this thing just shoots straight down. There's no entry to get into that. You make a lower high, again, no entry. We're going lower, but there's no setups. Then we go higher, 2 legs up, again, no setup. It's just real hard to read this. And then we bounce off the key entry point, make a higher low above the EMA and get a big bullish bar. That's what you want to see. And so I like taking that one. And off it goes. And you might have considered, notice that you come back here, but you don't quite get back to the trend line RLM, and then you come back here. So really, this makes a little bit of a higher low, but really there's 2 legs back there. So that's a possibility. But that looks really congested. I mean, I went back and forth with that one. I'll give it a green when it's such a bullish bar that you got to figure something. So let me zoom in a little more so we can see this. Especially when it tries to go lower twice right there. You do get a new low here. And then finally you get a 2-legged move back to the EMA on the first break of that. So now you finally got a second entry long above on the right side of the EMA with a good signal bar when you're expecting prices to go higher. So that's the first really sure thing almost we've seen. And it runs on up pretty quick, but makes a new high and keeps going, but it peters out before long. We just can't seem to get a good setup that sustains anything. And then of course we come back, you get another first entry, pull back, and another second entry with another good signal bar. So hey, we got 2 in a row pretty quickly there. Again, no huge runners. Now I say that, I won't say no runners because you get a runner there. I mean, that's 7 points again almost. So even though that doesn't look like a big move, that's still a pretty good runner where you can get 3 or 4 or 5 points out of. And that one right there is 14 points. So that's a great chance for a runner. If you can get 5 to 10 points out of a runner, you've done good. Comes back, chops around, and then heads higher again. But I don't see anything in here that really would be worth entering. There is a pullback here with a first entry, and then it turns back down, and you get a second entry. So, but you'd have to trade this on the engulfing bar, and I don't know that I'd be willing to do that here with the break. And if you wait till this one closes, it closes below the EMA with too much stem on it. So I don't think you can enter there. It runs up. Turns back down, and next thing you know, we're going lower. This one would be tempting to trade short on most days, but this thing is accelerated here, and there's actually a couple of legs up here. And notice we didn't quite get the new one when it turns down. So on this trap here, that means we could run a good bit further in the other direction. And we had this overshoot way back here, so we're overdue for a break of that trend line. So that's something to think about there. And actually there's a 2-legged correction right there. So you might have even said, hey, I'm going to measure this from here. And when you do that, you got a perfect measured move almost. So, but to me, it looks like 1 leg up. This includes the break and the new leg, and then a 2-legged correction and another leg up. So I would measure it both ways, just in case it doesn't meet one of them. And it keeps going higher, you know where the next one would be. So, but that one's really tempting. It's also you might even argue that, hey, we got a double test here. So, but again, you got to trade that on an engulfing bar, and I'm just not crazy about it in a market like this. But we'll give that one a green one. and we drop on down. This is a two-legged move back, but the signal bar is no good. And then you get another two-legged move back, and it actually breaks higher and turns down, so you got another engulfing bar. But I just don't think you want to enter that. You might enter that on the break lower. It broke higher first, then goes down. It is a second entry, but you've already had a break and a new low. But we're not back down here yet, and we hadn't had that break yet. So it's another one you might. I mean, there's several of them in here like this that you could probably argue for that I didn't mark. So if you see one like that and I didn't mark it or talk about it, it doesn't mean that there weren't some reasons you might consider it. So, of course, we run down here and we get our first break. And then we run up and you just get a first entry. And then you get a second entry here. But it's not really a perfect reversal. But it does break lower first and go higher. So maybe you take that trade. Maybe you don't. I don't know. We'll mark it green. Of course, we run up, we get a break, and we try to go higher 3 times. It's too congested, if you'd had a better signal bar, maybe you go short and ride this back to the EMA, but I don't like that congestion with that much stem on that bar. There is a triple test there, maybe even a quadruple test. And you know why we're getting it, because we're running into this resistance up here, but we're not quite back up there yet either. That's another reason, because it could break lower and trap you and run up and then turn down. So that's a reason you just have to be careful with that one. But you might look and say, hey, we got a new high. You try to go higher once, twice, and it fails. I marked that one. It's right on, it confirms that trend line right down through there. You did have a break and you didn't quite get a new high, so you could get another leg down like this. So I would measure this over here and look for that. And of course, we did get a perfect measured leg down, basically. So that might be what you're looking for right there. And I didn't mark this one because we were in this green trading range and we broke lower here. And you make a double bottom and then you make a higher low right here that closes above the EMA. So I didn't mark that one. That's another one. It actually broke lower first and then turned up. I just don't know about waiting until way up here to go short, because you're probably going to pull back to the EMA. And it could pull all the way back to here and test this again. So if you traded it on the engulfing bar and went long there, maybe. Again, it's just one of those that's in there that you could argue for, that's just not ideal. But here's another one here that's much like this one. You try to go higher 3 times up here, and then you get the lower high as well, and you're way away from the EMA, but it's congested looking. And you've got your first break of this channel here. I didn't color. I got so many of these I didn't color them all. And you hadn't made a new high yet. So, but again, you got enough room there. You may say, hey, I want to take that trade. There's reasons to consider it. And you can see it even tried to come back and make a retest of the high one more time and still couldn't make it. And that was on the break. Then we run down and you find support down here, bounces. I don't see any reason to go long here anywhere yet. Then we're moving down and you're just kind of bouncing all over the place here. It's up and down, up and down. It's really flat, and now we're just kind of stuck around the midline, hovering back and forth above and below it. So I just don't see anything you want to trade there. So we finally run up and turn down off the high. You get a lower high with a great signal bar. Now that's the kind of trade you want. And you would hope it would go all the way to the other side. It doesn't. But again, doesn't look like much there, but there's 10 points. Easy runner. Can get 4 or 5 points, 6, 7, 8 points out of that. And then of course it bounces. That's a second entry long, but right there I wouldn't take that. High or low right here, no setup, and look at it go. It's too bad there wasn't a failed second entry here because then you would have had a little more reason to maybe take that. And you can see all they did was they ran the stops from everybody that got short here. And once we're going higher, this is probably where a lot of the shorts had drawn the sand, line in the sand that says, hey, I'm putting my safety stop here. If we break above this, I'm getting the heck out of this market. And that's what, and you can see that momentum just sends this rocketing higher. And then just as quick, it's running back down again. And I mean, I don't see a good way to enter this here to go short. There is a reversal long here, and there is a good bit of room back to the EMA, but that's some strong momentum. And you want to know what you're doing before you, and you can see that. And that's the first close outside. There's no close outside in new high. So I'm a little wary of entering right there. Turns out it works great, and you would expect the breakout to fail, but you wouldn't expect it to go that far in most cases either. This is not a normal day. This is 30 minutes, and I still got a long way to go. Not many more trades, but I don't see anything in here I like. There's a first entry, second entry, and it is the first break, but it's right back into that support resistance. But that's another trade that you could really argue for. And so I'll mark it green. I like the lower high better, and it's an engulfing bar, so you might trade it on the engulfing bar, but that's right back into the resistance. And this would be the better place to trade it, but again, it's just such a big bar, I marked it green. You could argue for that one to be red almost. Both of these are real close, but I marked them green. So then, of course, you get a first entry, and you move up and you get a second entry here and a second entry long. Notice the new high, first entry, second entry, right off the key entry point. Nice bullish bar. I like going long on that one. Again, I made it green just simply because we've been hovering back and forth, but this is another one. You could almost argue for this one to be blue. The reason I made it green is you got 3 bars in a row and one of them has no body. So it is congestion, but it's a second entry as well. And we run out, we just start working sideways. I don't see anything there I like. There's a breakout pullback there, but again, I'm just not crazy about it. We run on up, you get your first break, and really you just start a flatter channel working up here. And I like this one just simply because you make a new low, you get a first entry short, you get a second entry short, it fails. If it breaks higher there, they're going to trap some shorts. People picking this top, looking to pick a top. And you can see how that rockets up, and once they ran out, hit all the stops, it just kind of slowly comes back again, and it bounces off that trend line again. But that's too big a bar on a first entry, and then you get a first entry, second entry, but congested, not back to the trend line, which see it comes back, and it's just looking too congested here. Maybe you argue for that to be a triple test. And a fairly nice signal bar, but it's right at this resistance. It does kind of close above that, so that's a possibility after the triple test. You could argue for that one. Higher low here, but it's way too far away from the EMA. And then we're just chopping along again, and once again you get a triple test. And this time you got plenty of room and a good signal bar. I like that one. We fell on the breakout, but you can't trade that. It's not a good enough signal bar. You fell on the break lower. Again, not a good enough signal bar, and that takes you into 230. So this is a 34-minute chart lesson. A lot of price action without a lot of trades here. A lot of maybes, iffies. I mean, they're all in here. It's just a crazy day. So anyway, I'm not going to beat around the bush. I'm going to wrap it up and wrap up our week. We'll be back again Monday. I'm done for today. I hope you had a good trading day. And be careful in this stuff, as I talked about before. This is Mac with PriceActionTradingSystem.com, and we'll see you next